This is your LMAX Exchange technical update for Wednesday, August 9th, 2017. Euro dollar. So the euro has recently stalled out by 2017 and plus 2.5-year high at 119.11, and the market could be poised for additional setbacks over the coming sessions. Remember, the weekly chart is looking quite extended as well, with the RSI into Wednesday tracking at about 75, and so there is room for those overbought studies to continue to unwind. Look for the possibility of additional declines down towards the 50-day moving average, which comes in the 114s, before the market considers the possibility of a higher low and resumption of this run that we've seen in 2017. So again, the uptrend here remains firmly intact, but it's just a question of a market that's been extended and needing possibly to see a little bit more of a correction before it considers a resumption of gains. Sterling dollar. So cable has seen setbacks accelerate following that latest run up to a fresh 2017 high at 132.68 in the previous week. There is room now for these setbacks to extend some more down towards a critical previous resistance now turned support spot at 127.75. Remember, the market had broken out above what had been a range high at 127.75 back in April to set up the possibility for this longer term base in cable off that plus 30-year low at 118.40 from October of 2016. And so again, if we do see setbacks, and there is room for setbacks over the coming sessions, they're expected to be supported down in the 127s ahead of a resumption of gains or a consolidation, at least for some period of time, before the market continues higher back above 132.68 and towards that next measured move extension, which comes in at 135 further up. Only back below 25.90, that's a low going back to the 21st of June, would compromise the constructive outlook for cable. Dollar yen. So dollar yen continues to adhere to some choppy sideways trade this year, with the market continuing to be very well capped up on rallies above 114, and the latest topside failure at 114.50 has opened this round of declines that could now extend back towards a retest and potential break of the 2017 low, which comes in just ahead of 108. Any rallies that we do see should continue to be well capped, and only a break back above 114.50, that's the high going back to July 11th, would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has been in the process of correcting and unwinding from some extended technical readings following a push up to fresh multi-month highs and the highest levels this market has been at since January of 2015, at that memorable SNB Euro Swiss collapse when the SNB removed that floor in January of 2015, that 120 floor. And so there is risk that the market continues to extend higher with not a lot of resistance up towards 120 over the medium term. But again, short term, this run has looked a little bit exhausted and has been consolidating, and there is risk that we see these technical studies unwind, opening the door for a correction in this market back down towards previous resistance now turned support, that previous breakout area at 112, in favor of potentially a higher low and a resumption of gains through 115.40 and up towards 120. But again, short term, there is risk for a bit more of a decline to the move to the downside before the market considers a resumption of gains. Aussie dollar. So Aussie has been showing signs of a potential top over the past several days, a top off that 2017 and plus 2-year high above 80 at 80.66. And so there is risk that the market extends declines over the coming sessions, but we still need to see a break and close below some support, which comes in around 78.75 to strengthen this outlook. And if we do see that, then that would open the door for a move down towards the 76 area, 75 to 76 area. But again, we have to focus on this 78.75 key support. That's the low going back to the 21st of July, and a close below there would set the stage for an acceleration of declines into the 76s, maybe even to the 75s. Dollar CAD. So dollar CAD is finally showing signs of bottoming out after putting in a 2017 and plus 2-year low at 24.14. That was after it took out the 2016 base, which was in place at 24.60. And so there is risk now on a short-term basis for additional upside towards 130 before the market considers potentially rolling back over But at the same time, if the market pushes higher and establishes back above 130, we could be looking at a resumption of a longer-term trend that's favoring the top side. So again, a bit of an inflection point here with dollar CAD. Clearly, the pressure has been on the downside since the market topped out by a 2017 high back in the month of May, just shy of 138. And now the market could be looking lower. But again, on a short-term basis, we're seeing this bounce, which could lead to at least a move up towards the 130 area before it considers either a bearish resumption or a more significant resumption of the medium to longer term trend, which is favoring the top side. Kiwi dollar. So the New Zealand dollar has pulled back quite a bit since topping out above 75 at its own plus 2-year high at 75.58. There is room now for the market to accelerate further to the downside towards 72 after the market had put in a break and closed below 74. At this point, on a longer term basis, the push up through 75 does open the door for the possibility that the market will continue higher over the coming weeks and months. But again, shorter term, there is risk, at least now, for additional declines to extend down towards the 72 area. SPX 500. The S&P 500 has recently put in a fresh record high at 2490 about ahead of the latest pullback. There are signs that the market could be looking a little tired up here at these record highs following an intense uptrend that we've seen over the past several years. But at a minimum, the market would need to establish a daily close back below that low from the 27th of July, which comes in around 2458, to take the immediate pressure off the top side and open the door for a meaningful potential short-term reversal. So again, nothing to talk about here despite the pullback that we saw in Tuesday trade while the market holds above that 24.58 low. If we see a break below 24.58, then it could potentially set up a reversal and at a minimum take the pressure off the top side on a shorter term basis. Gold. So gold, as we've been talking about, continues to be very well supported on dips, but at the same time, we have seen sharp pullbacks in this market. The market is expected to now be well supported ahead of 1200, and ideally should be supported in the 1230 area if we do see any setbacks in the sessions ahead, in favor of an eventual push back above 1275, the high from the other week, and towards the 1296 2017 peak further up. If we see a break above that level, that will expose a retest of the 2016 high at 1375. Again, only back below 1200 here would compromise the constructive outlook for gold, though we could continue to see some choppy up and down trade.